Stockton, Fairlead Strategies managing partner. Katie, before we get to the VIX, I want to go to Bitcoin because you say that's an important sentiment tell right now. Why? What is it showing?
I think it's a read on retail sentiment. So the retail investor is really very interested in Bitcoin. We just published a weekly report featuring it because of that. There's definitely an appetite for research around Bitcoin. And I think technical analysis is really the best way to look at it. And it's really important to differentiate between short, intermediate, and long term because of the inevitable volatility there, right? So we look at the short term, it has an upward bias from a momentum perspective. However, there is about 16.5% downside just to the 50-day moving average alone. And that just tells us that we can expect one thing, which is volatility. And that does also suggest that perhaps over the intermediate term that Bitcoin will come off of its highs, will leave its intermediate term overbought condition before then resuming its long-term uptrend. So I think we really need to pay attention to time frame there. And also, it's been a little bit of a read in terms of risk on, risk off from the retail investor. As mentioned, if we come into our desk in the morning and see Bitcoin trading off 20%, probably a good chance that the equity market's going to be under pressure as well. It'll maintain a strong positive correlation, but their correlation has increased over time this year. So I think that's pretty interesting, and perhaps that correlation breaks up as it sometimes does. But we're looking at it for cues as to how the retail investor feels about things.
So can we just pull up your Bitcoin compass, which is a good. We made a graphic of it. So are you saying it shows in the short term Bitcoin's a buy? Let's just pull up the graphic if we could. Long term, it's a buy. Medium term, not so much, and the same applies for stocks. Explain this to us.
Right, not exactly the same would apply, but for Bitcoin, we wanted to try to isolate it in a way that's easy to digest. Sometimes the technical indicators can get kind of complicated, but we wanted to isolate those moves over the different time horizons. For us, short term is days to weeks, medium term is sort of weeks to months, and long term is months to years. So we want to be a holder here in the near term to take advantage of that short-term momentum, but probably a better seller into strength to avoid that overbought digestion phase before the long-term uptrend resumes. We really believe in the long-term uptrend in Bitcoin, which of course completed a massive base breakout just a few months ago. Now, the same comments wouldn't exactly apply to the equity market. We actually have a neutral to lower short-term bias for the S&P 500. We saw, of course, some weakness today, and that came off of a short-term overbought reading. We'd already seen a nice oversold bounce or relief rally for the major indices. The S&P 500 was at new all-time highs. So really that pullback doesn't impact the charts in much of a negative way, but it does remind us that there is an overbought condition that needs to be worked off. But when we look at something like the VIX, which is, of course, a gauge of market sentiment, especially on the institutional side of things, we saw the VIX take out that 20 level, which was a very important support level for the past year since the COVID-19 correction hit the market. So that floor of 20 has now been taken out today, irrespective of the rally. And to me, that suggests that we've moved from a high volatility regime that's naturally associated with the global pandemic to perhaps a low volatility regime that beyond the very near term should allow the market to kind of uphold its long-term uptrend.
Albeit volatility obviously up again by the end of the session today. Tell us what you're thinking, Katie, about cyclicals here, and specifically between the two recent outperformers, banks and energy, which moved in opposite directions today.
That's right. I have a bit of a contrarian stance in the near term on the cyclical sectors. It's because in relative terms, when you look at the likes of energy and selected area of financials, they have signs of short-term upside exhaustion. They're sort of losing upside momentum when you look at the ratios versus the S&P 500. And at the same time, we've actually seen some rotation that's come to the benefit of large cap technology stocks. And of course, growth has really significantly underperformed value recently. I think that's kind of here to stay for this year. But in the near term, those ratios are extremely extended to the downside, and it favors a little rotation back into growth at the expense of some of these overextended value-oriented areas of the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.